first session of the conference will discuss central banking and dealing with the enduring impact of the crisis. Session 1 will be chaired by Dr. Eli Remolona. Dr. Remolona is Professor of Finance at the Asia School of Business in Kuala Lumpur. He sits on the Council of Advisors of the Academy of Finance in Hong Kong. He spent most of his career in central banking, 14 years at the New York Fed and 19 years at the Bank for International Settlements. At the BIS, he was head of financial markets, editor of the BIS Quarterly Review, and chief representative for Asia and the Pacific. He holds a PhD in economics from Stanford University. Dr. Remolona, you have the floor.
Thank you. Good afternoon and good morning, as the case may be. This is the session on central banking dealing with the enduring impact of COVID-19. I'm Eli Remolona. It is my honor to be the chair for this session. Let me start by introducing our eminent panelists and what a hard-hitting group of panelists we have today. Dr. Seti Aziz, of course, was Governor of Bank Negara, Malaysia from 2000 to 2016. Early in her career, in a baptism by fire, she helped manage the 1997 Asian crisis, which placed Malaysia solidly on the path to a strong recovery. He has helped transform the Malaysian financial system. He was active in regional cooperation and was unrelenting in working for Asian and East Asian regional financial integration. She has been chair of the Central Bank Governance Group at the BIS and has been a strong voice for the emerging world on many global issues. She is currently co-chair of the Board of Governors of Asia School of Business in collaboration with MIT Sloan. Jacob Frenkel, as all of you know, has been chair of, almost everything, including the Board of Trustees of the Group of 30, JP Morgan Chase International, Merrill Lynch International. He was governor of the Bank of Israel. He was economic counselor and director of research at the IMF, professor of economics at the University of Chicago. He is fellow of the Econometric Society, a foreign honorary member of the American Academy of Arts and Sciences, a member of the Board of Governors of the National Bureau of Economic Research, and of the Peterson Institute for International Economics, and a global member of the Trilateral Commission, and a laureate of the 2002 Israel Prize in Economics. Sydney Krogstrup is a member of the Board of Governors of Denmark's National Bank. She holds a master's degree from the University of Copenhagen and a PhD in international economics from the Graduate Institute of International and Development Studies in Geneva. Sydney has extensive experience in economic research and monetary policy. Before joining the Denmark's National Bank in June 2019, he had an advisor position and was member of senior management in the research department of the IMF. Henry Olsen has been deputy governor of the Swedish Riksbank since January 2015, with a term of office of 6 years. On October 2020, Mr. Olsen's mandate as executive board member was extended for 5 years from January 2021. Henry is professor of economics at Uppsala University. He has previously been a member of the board of the Swedish Public Employment Service and chair of the Economic Council of Swedish Industry. Without further ado, let me direct the first question to Governor Seti. Dr. Seti, as you know, when you were a young central banker, you faced the Asian crisis, and more recently, you also faced the spillover effects from the global financial crisis. How is that different from what's happening this time? What challenges has Bank Negara Malaysia been confronting during the pandemic, that it did not confront in previous crises. Dr. Shetty?
Yes, thank you. Thank you very much. It's really a great honor and pleasure to be here with old friends from the central banking community, and also to see the new generation of the community. To the question being raised here, how is this crisis different this time? Well, this time is indeed different. Previously, the crisis originated from the financial markets and was translated into the financial crisis with widespread stress of financial institutions, which then evolved into an economic crisis. This time, the crisis originated from a health pandemic, and the shutdowns implemented to contain the spread of the crisis brought economies to a grinding halt. And so, in addition to the origin of the crisis being different, this time it did not, I should say, while it was the financial sector was affected by these developments, it did not translate into a financial crisis. And then its consequences on the economy has also occurred at a significantly greater speed. The harsh and severe economic contraction has been front-loaded, unlike previously. Previously, it was gradually as banks pulled credit lines, back credit lines, and so on, the economy slowed. But this time, it was the economic contraction occurred upfront. Then, currently, the pandemic has also resulted into a humanitarian crisis, and inequalities in particular has been very much accentuated. And so while this always happens in every crisis where we see rising inequalities, in this particular case, it is more pronounced. And finally, this crisis has also prompted greater leverage on technology, leading to accelerated innovation for the central banks in particular, in like the payment systems and other connectivity that was that came about. But essentially, it has transformed, this technology has transformed by need, prompted by need during this period where everything had to be done virtually. So the connectivity itself manifested, the way it has manifested has changed, but the way of doing business, how business is being conducted, and how we live has changed immensely. So these are the major differences between the previous crisis and the current one. So what then are the new challenges for central banks? Well, previously, the burden was placed on central banks to support the economy, bringing about an economic recovery. And not only was there massive liquidity injections into the financial system, but interest rates were in most cases brought down to zero or near zero levels, and in some cases negative levels. And at times, there was a lot of discussion on the over-reliance on the central bank to bring about the recovery. And then there was also a lot of discussion on that interest rates was kept at too low for too long. And the discussion also, there was certainly at the BIS, on the financial imbalances that may result due to excessive risk-taking following, and that if this was prevailed over an extended period of time, it would bring about potential permanent damage to the economy on misallocation of resources. So then, of course, such low interest rates could also, and I think Governor in his introduction mentioned, result in the formation of asset bubbles. And in this particular situation, I would like to mention that it makes the inequalities more pronounced because those who own stocks and shares and capital would earn higher returns, while wages generally has remained stagnant, if not declined in this kind of period. Also, savings in the form of deposits earn low returns. So then there's also the lesson that while monetary policy and interest rates are successful and has shown it to be in reining in inflation, it has been less able to deal with the upside potential of the economy. So we have seen this to be the case for a number of economies where interest rates was really brought down to these lows, and the time it has taken to actually precipitate a recovery was far longer, and the recovery wasn't as strong as anticipated, despite the unprecedentedly low interest rate environment. So this time, policies the policy response has been more comprehensive and across several parts of government. In other words, there wasn't the over-reliance on central bank to do the job. And in particular, this time round, there's a greater role of fiscal policy, and rightly so, for the economic contraction as a stimulus in response to the economic contraction that has taken place, and to provide relief as well. So it is therefore now the collective response, including that by the central bank, to this crisis. The challenge for central banks in this environment is twofold. First, to recognize this time there is also the greater interconnectedness and interdependence within our system, with new channels through which risks can be transmitted, and that the management of the crisis is no longer the remit of one authority, but it is the collective efforts of multiple agencies. So for the central bank, it's therefore required greater effective cooperation with these agencies, collaboration and coordination, while avoiding being compromised by actions that may be taken, because the central bank, of course, guards these certain principles relating to its independence very preciously. On the part of central banks, the role has not only been the traditional policy response to lower interest rates, to provide liquidity and to enhance access to financing, but to leverage on technology to ensure access to financial services during period of restrictions in movement, and then to implement schemes and measures to provide relief for households and especially small businesses, and then allowing for deferred, like for example, loan repayments and facilitating loan restructuring for households and these. Finally, during periods of great uncertainty, central banks have even now a more important communication role. It becomes paramount to provide authoritative assessments on financial and economic developments, to yield a better informed community, to be better positioned to make better decisions or choices, and thereby making for more orderly conditions in the market and economy. Finally, as with managing any crisis, it's the timing of the exit from the specific and targeted measures. implemented during the crises. Too prematurely, it might hinder the recovery, and too overdue has its own unintended consequences. So this related to this challenge, of course, is the transition from being part of the containment and relief agenda to address the immediate term challenges, to address the medium and longer term vulnerabilities and challenges so that the economy can achieve a sustainable recovery. Thank you very much.
Thank you, Dr. Sethi. Thank you for a very rich discussion. The origins of this crisis are different. The consequences have been front-loaded. The humanitarian aspect is more severe. The policy response has had to be more comprehensive, and so the central bank is not the only actor in the policy response. It has had to coordinate more closely with the fiscal side and with other parts of the government. And then you warned us about the exit, which has to be, the timing of which will be very critical in order to sustain the recovery. Thank you. Let me now turn to Jacob Frankel. Jacob, do you see any long-term effects, what people call the scarring effects of the pandemic? So which ones might you consider to be the most significant?
Thank you very much, Eli, for the introduction. And I would like to thank so much the organizers of this conference. Thank you, Governor Diokno. Thank you, Mark Uzan. And thank you to all the staff that has brought this about. It's a great privilege for me to participate in this panel, especially following my dear friend and colleague, Governor Sethi. And I must say, maybe we have spent too many years together or too many decades together, but I agree with every word that the governor made. And so let me go a little bit in a different angle, if I may. The title of the conference is Central Banking in the Post-COVID World. I wish we were there. We are not in the post-COVID world. And frankly, we are unlikely to be in the post-COVID world very soon. And even if we are going to be in the post-COVID world, we will not be permanently in the post-pandemic world. And we will talk later about the systemic implications of how the system must address the world in which pandemic is part of the challenge. But I'll come back to the central banking notion. Given that we are not going yet to be in the post-pandemic world, but hopefully we are moving along the trajectory, the question is, how long are we going to be in the world of unconventional? Because if you look at all past crises, at the first impact, the crisis brought about some new policies that occasionally departed from convention, and the idea was that this is a detour. And when we come to the next phase, we will come back to the convention. But each time, the world became different and new crises came about. And of course, this long detour that we are now in, together with the fact that was so well emphasized by Governor Sethi, that the nature of the crisis is fundamentally different, originating not from an economic shock, but having profound economic implications, the question is, how are we going to deal with it? My theme would be that it will be very helpful, and I would say prudent, to keep in mind the old conventions that have been built over generations of experience and not throw them away with every and any new reality. Yes, it is not the same as it was before, but the fundamentals are still there. And I would say that it would be very useful objective for the medium term to bring central banking back to where it used to be, of course, modified to deal with the specific issues. And let me start by saying that if you remember when Mark Uzan introduced the conference, he spoke about the unevenness. And indeed, a couple of weeks ago, when I participated in the Jackson Hole conference, unevenness was the theme. There is unevenness of the impact between the developed and developing countries, geographic. There is unevenness about in the labor markets. There is unevenness between sectors. How are we going to handle it? Now, to begin with, when we went to elementary economics, we were told that monetary policy is not a sectoral policy, it is an aggregative policy. And for sectoral issues, there are other policy instruments. One of the reasons why there was so much reliance on monetary policy in past crises was that it became the only game in town, and as a result, we accepted the fact that somehow other policy instruments are not usable. I think that in the last crisis, we see that the other policy instruments can and are usable. And indeed, fiscal policies all over the world has responded, providing therefore the opportunity for monetary policy maybe to retrench and come back to where it belongs. The notion of overburdened monetary policy has been a bothersome notion for the last 30 plus years, and it's very good that it's not going to happen. So we have heard last week from the Chairman Powell, that the world is going into tapering, with very strong focus on the fact that tapering does not mean necessarily raising interest rates, but it means reducing the rate at which the Fed buys assets in the market. And notice what happened. That tapering was the expectations of tapering was very well received by the markets. In contrast with the taper tantrum that we had several years ago in the Bernanke era. And I think that this brings me to another point that Governor Zetti has emphasized, the role of communication. The clarity of communication is extremely important. With it, policy instruments become more effective and less disruptive, and without it, it creates difficulties. Now, you were raising the question about the long-term scarring effect. Dermatologists claim that a scar is a process of healing. So I'm not sure whether every scar or long-term effect of the crisis needs to be put in the column of cost. Some are benefits. I think that the crisis, and I don't want to downplay the damages of the crisis and the human toll and all of this, we know that. But I want to emphasize a little bit in a more constructive and maybe optimistic way. Some of the issues that were generated by the crisis has been accelerating some processes that were very positive. Everyone recognizes that digitization is an extraordinary, powerful mechanism, and there is no question that the crisis has accelerated it. I believe that even the development of vaccines and the debates around them has demonstrated and laid to rest, I hope, that we need to pay great respect to science, and I would say this is the victory of science. I believe that the way of doing business is going to be different, not always without friction, but in many cases more positive and more economical. The idea of productivity, remember for a long time we spoke about productivity slowdown, and suddenly you have activities that are generating a productivity. New applications to information technology, to computer power, even the dangers that emanate from cyber are addressed by some of the tools that are developed. To make a long story short, it means that we need to think about what has happened in this current crisis, not only as a derailment, but rather also as an opportunity to put us back into the mode of long term. And I will conclude by making one remark. We speak about crisis. Crisis normally has three dimensions: crisis prevention, crisis management, and crisis resolution. And we are focusing very much about the crisis management because that's what is with us all the time. And we forget to prepare ourselves for the post-crisis because the political appetite to deal with it. That's a major challenge. How to prevent the next crisis and how to create the institutional setting that will enable us to deal with this next crisis. There is the Chinese saying that the honey is sweet, but the bee is stinging. And the question is, how can you enjoy the sweetness of the honey without being stung by the bee? And we have now, before the pandemic, we have had the problem of trade war. We have had the problem of climate crisis. We have had many of the other issues of debt. The way in which we dealt with the crisis was through fiscal expansion, thereby expanded that even more. So with this in mind, I think that the challenge is how to switch from a mode of crisis, which is a short-term mode, into a mode of growth and expansion, which is not a zero-sum mode. And this means technology, innovation, challenges into the future. And I think that's extremely important to switch the mindset from short-term crisis management into long-term resumption of growth. And growth must be, however, sustainable growth. So it is inclusive growth and inclusive in the sense of society and inclusive of the sense of the next generation, namely environment. Thank you very much.
Thank you, Jacob. Very provocative, as usual. Emphasize the unevenness of the world we're in, the rediscovery of fiscal policy. You emphasized communication. Now we have a taper without the tantrum, and then I think you emphasized the crisis in a post-COVID world as an opportunity for taking advantage of what we have learned, new technologies, and the sustainable growth. So thank you. Let me now turn to Governor Kragstrup. Governor, in your an economy like Denmark, what are the main policy challenges of the central bank as the economy recovers from the pandemic? What are the appropriate policy responses? Governor?
Can you unmute me?
Someone unmute.
Okay. I have a problem unmuting.
We hear you, so you are not muted.
We can hear you.
Oh, thank goodness. Thanks so much. So thank you very much for inviting me to speak here today and on this really important topic. And thanks very much for the comments that we've already heard. I agree with a lot of it, and it's provocative and interesting. So I will address this specific question. So in that sense, I will be a lot more specific and down to what we are currently being confronted with in many advanced economies. But of course, I will speak from the vantage point of Denmark and give you some examples there. So I will talk a little bit about the overall environment that we're in now. And I agree, we can't call it the post-COVID world, but maybe the enduring impact of COVID-19. which is quite different from previous crises. So this time is indeed different. And then I will point out two specific concerns or challenges that we're currently grappling with. So the concern about inflation and the concerns about asset price growth and what we think are the appropriate responses there. So let me start first with a little bit of the background to where we are currently. So when we had the starting of the COVID pandemic and the lockdowns and the start of the crisis, we've had very strong macroeconomic policy responses. As you see here, that's just an overall summary of that. On the right side, on the left side, you see the purple line is euro area fiscal deficits, which were coming down pre-crisis, and at the crisis we had a huge expansion in fiscal deficits, mirroring these very forceful fiscal policy responses that we saw across developed countries in different ways. And we saw also something, we saw less of an expansion in the deficit in Denmark, but also very much an expansion in help and support packages. We also had very forceful responses of central banks, and we already talked a bit about that. We have been at very low interest rates for long, as we've also talked about. So that means that when this crisis hit and there was a need to make sure that monetary conditions would remain loose or even seek to loosen them, meant that we would have further balance sheet measures. So that was very much QE measures that were taken, but also funding, expanded access to funding for banks in many advanced economies. Denmark was a particular case because we do have a peg toward vis-a-vis the euro. So we do not do our own quantitative easing. And in fact, when the crisis hit in March 2020, we even increased our interest rate a bit because we had to make sure to keep the peg in the, while we had the outward capital flows. So that was a particular case, but we did also offer expanded access to liquidity, both in Danish kroner and also in US dollars and euros. Then we did see some particular developments in Denmark, is that we had these very forceful fiscal policy responses and needed to finance those, and we had a lot more uncertainty on the financing of government, which meant that we had a lot more uncertain fluctuations in the government account. And this had an impact in money markets. So we had a more unpredictable money market interest rate determination during this period, which meant that we in Denmark had to adjust our, or decided to adjust our monetary policy instruments in light of that. And that's something we can get back to if there's an interest. But what we saw was that indeed this was not a normal crisis. We had very strong drops in GDP during 2020, but we had equally strong rebounds afterwards, as you see here on the left, on the right side. Differently across countries and with bumps, and I will get back to that. In Denmark, we have had a particularly strong recovery. We have very high coverage of vaccinations. We in fact don't have any restrictions left. So that's also a big difference from many other countries, and I think particularly developing and countries and emerging markets, is that in Denmark, we really don't have restrictions left, and we have private demand largely back on track. That also means that we are confronted with a new set of concerns, one would say, both in terms of post-crisis, but also in terms of the many years of the decades since the global financial crisis, where we've had very low inflation rates and low interest rates. But we see now strong shortages of labor in Denmark, which means that we are looking into whether there could become more pressure on labor markets and maybe on wage bargaining. We are looking into whether could it be that we will have rising wages going forward. We also have supply chain disruptions, which means that there is supply prices are going up. And this has led broadly to concerns about inflationary pressures going forward. And that's not just in Denmark, that's of course across developed countries. What we see is that we have seen headline inflation going up. We've seen some price level increases. We hear anecdotal evidence of rising prices or rising wages, but we don't see these in the overall statistics yet. Core inflation remains quite low, around 1%, both in Denmark and in the euro area. And we also see that inflation expectations remain quite well anchored around inflation targets, especially in the euro area and Denmark. There's a bit more of a rise in the US, but this is also considered by the Fed to be temporary, and there is a policy action would be ready in case that it would not be. So we don't see this currently as a big concern. We do think that the most likely scenario is that inflation will remain low and below target or on target. And we don't expect, therefore, that that interest rates will rise. Of course, there's a lot of uncertainty and risk scenarios around that. We also don't expect real rates to go up. Natural real interest rates have been low for a long time. They have been coming down for structural reasons. Some of them we've already talked about, inequality, for instance, but also demographic factors. We don't see the pandemic having changed that. And so we don't expect natural real interest rates to rise either. So the most likely scenario for us is that we will continue to be in a low interest rate world. And that brings me to my next topic, which is that we have also seen quite strong asset price developments. When the crisis first hit, we saw drops in asset prices, and this is central banks responded to that. But we very quickly saw asset prices returning to quite strong growth, and surprisingly so for some. Equity prices, for instance, went down but came up very quickly and have been rising. And not just explained by low interest rates, but we've also seen in Denmark, at least, what we estimate is that equity risk premiums have been coming down, but from high levels, and they remain high. But that is part of the explanation for strong equity price growth. What I have on this slide is a focus on housing prices. So housing prices came a little bit down at the onset, but have been coming very strongly up during the pandemic. In most advanced economies. I can tell you that in Denmark during the pandemic, we had an increase in house prices of about 15% for the country as a whole. And particularly in the bigger cities, these numbers were much higher. We do see a little bit of an evening out, and these developments are quite different across countries, but we still have very strong fundamentals in housing markets. This is something that we have a keen eye on, because housing developments have been a strong amplifier in Denmark, as well as in other countries I know, but particularly in Denmark, for the business cycle and also for boom-bust episodes. We saw an episode like that around the global financial crisis, where we had very strong buildup of both house prices and credit growth before the crisis, and that led to a bust in the housing market post-crisis, which was a big amplifier of the business cycle back then. So we're keeping a close eye on this. One of the things that we saw in the financial crisis was that some of the credit buildup was, or a big part of it was through this mortgages without amortization, so interest-only loans. And they have been associated with vulnerabilities in the past. Now, what I show you here on the right side is that credit growth has only picked up marginally since the pandemic started. So from around 3% growth before the crisis to around 4% now. So that in itself is not a red light yet. But what we see is that this pickup in growth is mainly led now by mortgages that are interest only as well. So we are keeping an eye on that, and that would be a concern. Another concern for us is that we see historically that credit growth picks up with a lag. So we will be keeping a strong eye on whether credit growth is going to pick up in the years to come. And we think that now is the time to be preventive. So coming back to Mr. Frankel's points, we do not want to see the kind of credit growth build up and vulnerabilities build up that we have seen in previous episodes. So we think that now is the right time to respond. And that's why I have the title here, is there a need for macroprudential policies? we do think that this is a time for us in Denmark to consider macroprudential policies that will prevent the kinds of vulnerabilities that we've seen in the past. We think that we should restrict access to interest-only loans for households that are particularly highly indebted. We also have tax deductibility for interest payments that are giving incentives to not amortize, for instance, but to have balance sheet expansion. And now would also be a good time to consider reducing these incentives. And now is a good time because we have such strong economic developments in Denmark. It's very hard to introduce such measures that are strong, that are structurally desirable in times where the economy or the housing market is going down. That's not the case now. So those were some of the big considerations that are on our desk currently, and I will stop here.
Thank you, Signy. Thank you. The two concerns, one is inflation, especially inflation emanating from the labor market. And second, asset prices, especially asset prices in the housing market, especially housing that's financed with interest-only mortgages. Thank you for that. Let me now turn to Deputy Governor Henry Olsen. Henry, one of the most exciting things about the Swedish Riksbank seems to be its efforts to explore the possibilities of the e-krona. It seems to me this is related to Jacob's point about exploiting new technologies. I believe you were in phase one of this experiment during the pandemic. Do you see any lessons from this experiment so far that might help us with the challenges going forward? Henry.
First of all, I would like to thank you for the kind invitation. I'm very happy to be able to join you all today. We have been working with the e-krona for a couple of years now, and the background is the declining use of cash in Sweden. On this graph, you see that in 2010, almost 40% of the most recent purchases were made in cash. In 2020, it's below 10%. So we see a rapid decline trend-wise in the use of cash. And this has accelerated during the pandemic. People are simply, because of the pandemic, afraid of holding cash in their hands. So next year, when we will do this survey again, I'm sure that we will be below 5% or something like that. So obviously, the cash use in Sweden is going down. We've been discussing for a long time what to do about this, whether to do anything at all, and if you decide to do something, what to do. And the e-krona project, the objectives are, first of all, to make an offer to the public to hold a claim on the central bank in a different way than cash. So the e-krona will be an offer to the public in Sweden. We think that this offer could strengthen the resilience of the payment system. If the cash is not there, then we need something else from the central bank. We also believe that providing a platform of the e-krona can contribute to innovation and competition, because different smart people can find ideas to build on the platform of the e-krona system. We have different lessons learned from the e-krona project so far. We have had a pilot study testing the technology. So we have building a technology for payments with an e-krona in a closed environment. And this has worked out fine. So in the closed environment, we have sent money from one mobile phone to another, and it has worked out well. We have also started a second phase where we have involved some external partners in extending this system. So we will work with one of the big Swedish banks and one of the big Swedish IT companies and extend and see if this system can work in a more open environment than it has so far. So you can say that the e-krona pilot, we are building a parallel infrastructure for payments. One of the aspects technically is that we try to find technical solutions so the e-krona can be locally stored in a mobile phone or whatever in order to support offline payments. It brings challenges, but it is also very important that the payments work when you are offline. So far, we have not found any major technical obstacles for this system to work. We will, of course, continue, and as we open up our trials, we might find more trouble, but so far, technically, it has been fine. We have also learned from the legal perspective. I mean, the e-krona will be very similar to cash, but it won't be exactly the same. And it's very clear that the Swedish legislation needs to be adjusted in some ways in order for us to be able to introduce the e-krona. It's also important to see that AML considerations will also, of course, affect the e-krona. So there is work to do within that area. And it's also the case that an e-krona is challenging from bank secrecy perspective, but also with the respect to the regulation within the European Union, the general data protection regulation. So there is more work to be done there. So if I summarize, if we find obstacles for the e-krona, it has more to do with the legality and not so much with technology. This is our experience so far. So my final slide is the following: the road ahead for our work. We are in the phase one with the pilot project. There is a central government parliamentary committee working on these issues, the future of the payment system in Sweden, and they will present their report slightly more than a year from now. We expect to continue the pilot project phase two from the first quarter next year. And then we will see where we will be in the future. We haven't made any final decisions yet, and we need to see how technology develops in order to know if we can go further, and we need to have the results of the parliamentary committee. So if I summarize and with respect to your question, I think the pandemic has mostly affected the demand for cash. It hasn't affected so much our work with the technological and legal aspects of it. But certainly, if people don't want to hold cash because it's not convenient or they are afraid for holding cash, then it's an important question for a central bank if we should offer something instead. I stop there. Thank you.
Thank you, Deputy Governor. It's striking to me that the issues surrounding the e-krona have to do more with legal issues than with the technology issues. But very interesting presentation. Let me now turn to the whole group and ask the same question to the whole group of panelists. The question is about tools, central banking tools. As you know, each time we have a crisis, we seem to develop new tools to confront the crisis. How about during the pandemic? Have we found new tools in our arsenal that might help us with the next crisis? Should the next crisis come? Are we developing new and better tools than before? Maybe I can start with Henry Olsen and then go in the reverse order. Henry?
Yes, thank you. Well, if we look at new tools, I think one important aspect is that we have used QE quite a lot in Sweden during the pandemic crisis. The objectives were, of course, to guarantee the supply of credit and lower market rates. One new thing for us is that we have purchased corporate bonds, and we had a learning process to do to figure out how we could do this in the best possible way. So this is really the most important new tool for us. Within this process, we have looked into the question of sustainability. So when deciding, which bonds to buy, we have used negative screening. So we've looked at all the different companies, and we have looked at whether or not they follow simple international standards with respect to sustainability and carbon footprints and so on. So the new tool has also included dimensions of sustainability. So this is one thing. We have also looked at our holdings of foreign exchange reserves with respect to sustainability and carbon. And in fact, we have done some adjustments in our portfolio of foreign assets. So for instance, we found a couple of possibilities with the same risk, with the same return, to adjust the portfolio in order to have less of carbon footprints. So we did that a while ago. And finally, with respect to sustainability, we are also looking at the collateral that different banks and other financial institutions, the collateral they give us. And we look at this collateral also from a sustainability perspective. So in three different aspects, sustainability has become a part of our evaluation of how to conduct our central bank business. So that's my answer to your question. Thank you.
Thank you, Deputy Governor. So corporate bonds and sustainability are new tools. Let me now turn to Sydney.
Thanks, a very good question. I think that it's important first to say that when the global financial crisis hit and we came down with interest rate to close to where they became restricted by a lower bound, lots of new tools were developed especially in advanced economies. So we developed QE tools, new funding tools, and I think that these tools, we also had the swaps in cross currency, and these tools were the ones that we suddenly now had a lot of experience in using when we needed it, when the COVID crisis hit. So when the COVID crisis hit, we were still in the situation of restrictions on how much we can use the conventional monetary policy. And I think that when the global financial crisis hit, there was a lot of work in developing what the best policy response was and how unconventional policies could be used and how they were complementary or substitutes to conventional policy. And these tools were the ones that were then deployed very forcefully and very quickly when the COVID crisis hit. And the development of new tools have been refinements to those, but I think the main tools were really the ones that we developed earlier. A particularly interesting thing, I think, for Denmark is that we have had a negative interest rate. So we have not deployed a lot of unconventional tools because our policy objective is to secure the peg of the Danish kroner. We are really using our conventional toolbox to a higher degree than many other countries. And we're setting the short-term interest rate. And it has been negative more or less since 2012. And we continued to use that throughout the crisis, very effectively so. I think that I hinted at that before, but one interesting thing that happened was that we were in a situation with a very large corridor, so that the interest rate could fluctuate quite a lot within the corridor. We had exemptions. Central banks could hold reserves at the central bank that were exempted from negative interest rates. And some of this became a bit of a challenge during the crisis because we had these large fluctuations in cash holdings of the government related to support measures. So we did some adjustments and we did some simplification. We narrowed the corridor and we also removed the exemptions of banks so that they could be exempted from negative interest rates. So we moved much closer to a conventional monetary policy framework for implementation of monetary policy in Denmark. And the lesson for us is that has been very successful. It has been feasible to do so, and so we are more back into conventional, but in the realm of negative interest rates. And a last point I want to make, since that we mentioned the sustainability issues, I think also it was in parallel to the crisis, and I don't think it's related, but in parallel to the crisis, of course, sustainability issues have become much higher on the agenda. And I very much agree with Mr. Frankel that we should be careful with central banks, that we should stick to our overall targets. We should not have sectoral policies. We should stay macroeconomic. The sustainability issues, however, they come in our view, they come in because we expect these to be affecting the macroeconomic outlook strongly in the future. And that is, it's in that sense, it is affecting our mandates. It will affect financial stability. It will be affecting the macroeconomic outlook, the process for inflation, and these are important things to understand in that sense. And I think maybe some of the things that we're seeing currently with changes in perhaps in inflation outlook, supply-driven price changes, and what that means for monetary policy, we're thinking a lot about these things, and they will become relevant also in a future where sustainability issues will also be affecting perhaps supply-driven price changes.
Thank you. So that's interesting. More use and better use, I guess, of the unconventional. But interestingly, a return to the conventional, return to the old reserve management tools. That's interesting. I turn now to Governor Zetti. Question of new tools.
Observed from the emerging market countries, emerging market economies, actually after the Asian financial crisis and other crises like being experienced in Latin America and so on, there was a trend towards a broader toolkit, to rely on broader toolkit more than in the advanced economies. And these related to establishing institutional arrangements, for example, having deposit insurance and then having a resolution authority and so on to better place us in crisis of the future. And then other institutional arrangements like having a credit guarantee corporation, and this allows access to raising of funds, and then other mechanisms and so on. And so these were all already in place, and even macroprudential measures in the 1990s. I recall we already used them extensively before the Asian crisis. So many of us didn't have a collapse of a property bubble and so on, because we had these macroprudential measures in place, but we weren't clever enough to call it macroprudential measures. So we were seen at that time of being too intrusive in our regulation. But now we have most of these tools already in place. But going now to the new issues that have emerged for the world, and that is the sustainability agenda. And I would like to touch on the three ESG. For the E, how have I seen that it has been addressed? And this relates to, yes, while I agree that the mandate on macroeconomic outlook is very important, the other aspect that is equally important is the financial stability aspect. And this relates, for example, for the E to incorporate, for example, the assumptions of investments or funds being channeled to investment activities that generate instability or affects risks, a threat to sustainability. So these have been incorporated, for example, into stress testing. And most of us actually, and we learned so many lessons after the Asian financial crisis, we already had preliminary stress testing models. And now to incorporate these assumptions of what the risks of what if it would do if these risks are materialized in the stress testing. The other aspect of it, of course, is we need also to look at the transparency and disclosure, and that's very important. There needs to be transparency and disclosure into what is happening in the financial institutions in particular on their implication of their activities on the environment. And so the standards of transparency and disclosure has been heightened or more extensive. And some of these standards are universal. They have been done in many parts of the world, but for certain groupings, we have, like in East Asia, we have introduced these. And this disclosure actually provides information on risk-taking that may damage the environment through these investments. And therefore, it provides a market discipline, a very powerful market discipline mechanism to constrain excessive risk-taking in these areas. So these are some of the new. And then finally, I should mention, just like what the European Union did for us in Asia, I noticed the most recent announcement that by this year, they will have also the taxonomy for the climate change and the threats to climate change, so that there is an understanding of how what areas that there will be in the Asian region to have this in place. So these measures, the third one that I should mention that I've noticed that has taken place in the East Asian region. Oh, can you hear me? Because I've seen everyone suddenly go off the screen.
I can hear you. I can
All
hear
right.
you.
The final one is that the measures to preserve financial, aside from the measures to use financial stability, is the social agenda, and this is the financial inclusion. So this is what has been done also by many of us, because this is surely a vulnerability that will threaten the balanced growth and the social consequences of it may be very disruptive to the economy. So many central banks. And then to very quickly conclude, the G out of the ESG, and this is the role of the boards and the shareholders. Also, there are many standards being introduced so that they incorporate assessments on the impact of their decisions on society and the environment. That is all that I wanted to add, that some of the developments that have been taking place in the emerging world to address these issues, the more recent ones, because most of the toolkit already are in place. Not only learned from the Asian crisis 20 years ago, but the more recent one in the 08-09 that provided many lessons also to the emerging world while we were not in crisis. And that is why I always said it shouldn't be called the global financial crisis. Of course, we were all affected by the crisis, and it also provides important lessons for us for what Jacob Frankel has mentioned, that we need to prepare ourselves for the future. Thank you.
Thank you. So more emphasis on ESG, including the social aspect and the governance aspect, but also I think more use of disclosure. I guess that's what we call Pillar 3 at the Basel Committee. Thank you. Jacob, I did not forget you, Jacob, but what do you think of new tools going forward?
Thank you very much. First, because I'm the last on this panel, I just want to say that it has been extremely gratifying to listen to the insights of the governors and the deputy governors from Denmark, from Sweden, and the like, because it gives you a very different perspective than when you listen to, and I'm not trying to make comparisons, but when you listen to the head of the Fed or the head of the ECB, they have different context, different implications, different constraints, and it's extremely appropriate and for me insightful to see how the smaller countries or address these matters, and I've learned a lot. Speaking of tools, you know, when one talks about the need for new tools, and of course we always need to refresh, the dangerous implication is that first, the old tools are not relevant. Second, we are in a new world and therefore the old concepts are less relevant, and we start history today. And one of the themes is that we need to be continuously rejuvenating, but by climbing on the shoulders of the predecessors in terms of both concepts, knowledge, experience, and challenges. So let me, I read this morning, I'm not digressing, but I read this morning the headline about the results of the German elections. And the headline said that there is a complete generation of Germans who do not even know how Germany may look like under different leadership than the one of Chancellor Angela Merkel, because it was so long they were not born or were not cognitively involved in any earlier era. By analogy, there is today a complete generation of all over the world of young people who do not know what does it mean to have inflation, and do not know what does it mean to have positive or high interest rates, and do not know what does it mean to have high debt burden, in the sense that the large stock of debt goes together with the large interest that has to be paid on the debt, because when interest rate is zero, the large stock of debt may not be so biting. And I believe that as we look into the future, all of those three issues, zero inflation, zero interest rates, very high debt, will need to be re-examined because we are not going to stay there. It's not sustainable. Now, and this brings me to the first issue. I remember when 30 years earlier, when Milton Friedman spoke about monetary policy, much of it had to do with permanent versus transitory, long and variable legs, but then there was one important insight, that the distinction between temporary and permanent changes of inflation is not a structural characteristic. It is a function of the policies that are being implemented. An inflation shock that is being addressed transforms something which is potentially permanent into temporary. If a temporary shock is not addressed, it is transformed into long-term. So we are not observers of processes and say, this is temporary and that's why we should not react. If we react, it will become temporary. So I'm not so much talking about active monetary policy as I say that the notion of looking through the real window and saying, looking in the past, that until I see inflation, I do not react, is a prescription to do things too late. Because once you see it, it's already too late. And here, I think that what we heard from Governor Krugstrup is very insightful. When to do it? Now. And it reminds me of a structure of old lectures. I always started lectures by saying there are 4 W's and 1 H. Why, who, where, when, and how. Why should we do it? Now, in the problems of today, the why is very obvious. We have global challenge, and therefore we need to address it with global approach. So the question is, who should do it? All of us. When we all do it, all of us, is this enough? Probably not. We need to have the institutional setting that will bring it about, because the whole issue is externalities, and externalities must be internalized. And in order to internalize, you have to have the mechanism. And if it is cross-border, exactly in a world in which there is so much fragmentation, you really need to worry about, do we have the machinery to internalize externalities? Otherwise, putting money into a system that does not implement the right internalization is not right to do it. So this, I think that this is not the time, but the checklist of who, when, where, and why is an important checklist, and of course, the how. Second point is, we are in a world of risk management. In a world of risk management, it means first that the truth is not absolutely 100% versus a 0%. So we really need to assess cost and benefit, and that's where the economics profession comes in. We need to ask, what is the cost, what is the benefit? But if we are asking this question, we need to ask in what time frame, short term, long term. And if we are incorporating the long term into the calculus, then we are bound to be more responsible, and therefore the ESG the government said that he mentioned comes into the equation. It is completely irrelevant if you are only short-termistic, and it's extremely relevant if you are long-termistic. So I think that this is the kind of thing. How do we address fragmentation? How do we internalize externalities? How do we have the machinery to do it? And basically, the question is, how do we exit processes that are not sustainable? And frankly, this is a very important question. If you are driving on a road and you see an entry into a highway, and I tell you that there is no exit from it, you will never enter that road. Because when you get to the end, you will need to undo everything, go back and start the problem again with the legacy of failure. So I think it is completely imperative for policymakers as they enter any place to ask what's the exit strategy, and it is part of the solution It's not a declaration of failure when you reverse course. It is the declaration of the process of recovery. So I made it in a more general remarks, but that's what I can say about it. Let me just make one last little advertisement. There was a G20 panel about how to deal with the next pandemic, the next crisis. And it was chaired by 3 individuals, Ngozi from Nigeria, Tharman from Singapore, and Larry Summers, and he may speak about it. And there was a panel of people. I was privileged to be part of this panel. But one of the issues that came up in the conclusions of this panel that was put together for the G20 was, what is the institutional structure that we need to have in place in order to deal with the next pandemic? And there will be a next pandemic. And the recommendation there is that we really need to recognize that in a world of externalities and public goods, we need to have the public support in the sense of public finances to ensure that it is in place before the next crisis embarks. I'm sure that Larry will speak about it, so I will stop here. Thank you very much.
Thank you, Jacob. As you said, these are general remarks, but I think these are remarks that are not said often enough. We have a new generation. We have new challenges, especially long-term issues, and then we need to have an exit strategy in everything we do. Thank you. There's quite a few questions from the public, but I wonder whether I could ask our panelists whether they have questions for each other. Maybe there's things that you wanted to pursue further with respect to each other's remarks. I don't know if we can, is there a mechanism for raising one's hand, but why don't each one just speak up if there are questions for the other panelists? Jacob, I'm sure you have a question for the others.
No, I have a million questions, but I would be more than happy to hear the audience, and I already expressed so much gratification to what I've learned from my colleagues on the panel. So I will not go there. I will only mention that as we entered this crisis, the background was a trade war and the danger of fragmentization and the protectionism.
Yes.
Are we going to accept this as the new reality, that the world is going to stay fragmented and that we will just look for other mechanisms for protectionism, whether it is even carbon taxes in a differentiated way, and how to do it, even if it is for a good cause? All of those issues are still open while we are addressing the question of the pandemic. The long-term effects of the pandemics on some of the sectors, especially the hospitality sectors, hotels, you name it, even aviation, are going to be there. And one facet for policy, and that's for fiscal authorities, is how to address the social and other implications of it. But for general policymakers, is how to really move forward, and what's the financial system that will generate the financing for whatever bridges that are needed. Because there is the difference between a bridge and a pier is whether at the end of the bridge there is something, or is it just no place. Let me stop here.
I guess the related question to that is, as the pandemic brought us closer together, it's a global pandemic. One would think it would bring us closer together, but is that really the case? Do you think that's the case? Can I ask Governor Zetti to give her view on this?
Well, there was at one time following the pandemic, the view that, or the assessment being made that countries are becoming inward looking because of the, and there was a lot of discussion, is there going to be a reversal in the trend for greater globalization and so on? And most of us felt that this was going to be temporary and that there would be a move towards greater interlinkages and globalization would continue on the trajectory that it was already on because of the immense benefits that it brought with it. And so I do think that while from time to time there will be tensions, but these should be resolved, and there should be outward-looking policies. And I think that the central banking community is a more cohesive community generally, and the network is a very positive one in facilitating the integrity and the functioning of the international financial system for financial flows to happen and cross-border investment activities to continue. And I don't think that trend will change, that it would be moved to continue in terms of volume and activity. Yes.
I think that's a very positive view. Okay? We welcome that view. Maybe I can ask Sinye and Henry to talk about the same issue, but also there's a question about the Growth and Stability Pact. What happens to that pact? What happens to the deficit conditions of that pact given the pandemic? Sinye, maybe you can start.
Let me just briefly follow up on whether we're getting closer to each other in the pandemic. And I very much agree that the central banking community is a very close-knit community. It's also my impression that it is only, if anything, getting the coordination and cooperation is very close and tight and has not been disrupted by the pandemic. The concerns would, of course, more be on private, on trade, on political ties, because we did have lockdowns. And we did have a move from companies that are experiencing supply disruptions at the global supply chains. Some of the responses to this may be, and it remains to be seen, but may be that we will be going closer to home again and reshoring instead of offshoring. And that can have consequences for globalization, but also for some of the benefits from international trade and cooperation. That remains to be seen. There has been big concerns. I think we've also seen many good signs, and we've also heard a lot of anecdotal evidence that maybe this will not be taking place. We'll find new ways of managing global supply chains that will be more robust and resistant to these types of lockdowns. But I do think it is something that we have to keep an eye on, remain vigilant about. On the Stability and Growth Pact, so of course the crisis has brought to a strong increase in government deficits across many countries. Less so in my own country, I must say, but in many countries we've had strong increases in deficits, and the Stability and Growth Pact has been suspended and remains suspended for this year, and has also led to a lot of discussion about when does the Stability and Growth Pact, when is it appropriate, and when is it a hindrance? And we've had that discussion in the context of and I will not say global financial crisis, but the financial crisis of 2008 and the response there, and the notion that fiscal policy was tightened too soon, and perhaps in relation to also to complying with fiscal rules. And so that we need, this time around, there has been much more attention to the fact that we should be very careful not to tighten too soon. That also means that we've had a suspended Stability and Growth Pact, for instance. These rules will continue to be discussed and updated. I know that it's very much, these discussions are very much on the agenda. We will see how that will remain going forward. But it is important that we keep good rules that will ensure fiscal prudence also going forward. Fiscal prudence, in the case of Denmark, but also generally, fiscal prudence has led to buffers that we have been able to draw on, and there are limits to those buffers, of course. We need to make sure we have a system in place that allows us to rebuild buffers when we're in good times so that we have them when we need them.
Thank you. Thank you. That your point about central bankers remaining close together, that's very reassuring. In a world where central bankers can't go to Basel or go to Washington or Brussels in a physical way, that's reassuring. Henry, maybe you have things to add.
A couple of points. Will we become closer together or more apart? I think that many companies in Sweden are thinking about their supply chains now, and I think that the supply chains will be shortened. But it's also a case that we experience, like Denmark, signs of labor shortages. But at the same time, we are members of the European Union. And the idea and the concept of the single market is really important for the European Union countries, that it really will work. And mobility of labor has been really difficult during the pandemic. But one way of easing these problems is to simply get the single market working again. I think that this is as important aspect as the Stability and Growth Pact. And then my final point is the following, that the solution during the pandemic has been in many ways and many different ways, more debt. We see more debt around the world. But I think that the solution during the pandemic will become the problem of tomorrow. And I think that we as central bankers will have to deal with a lot of financial stability issues in the future because of the increase in debt for many different agents. That's it.
Thank you. I'm very conscious of the time. And I think the last round of discussions is a good way to end this panel discussion, because I think it's on a very good note of cooperation. So let me thank each of the panelists. Let me thank Dr. Sethi. Let me thank Jacob Frankel, Sidney Kragstrup, and Henry Olsen. Thank you. Thank you very much. Wonderful, wonderful discussion.
Thank you.
Thank you for running it so well. Thank you.
Thank you, Jacob.
Thank you very much.
All the best.
All the best to everyone.
All the best.